Hey everyone, and welcome to your daily update for Sol and BTC. So we've had a pretty grueling, grinding dump. We've just hit the weekly break level, and weekly break level retest from the accumulation range. So don't worry, the weekly range is not broken. That was kind of the last weekly retest that was left over from BTC since it went to all-time high. So anything lower than this is pretty much digging down into prior ranges. But if we do bounce from here, then you're actually in a bit of a healthy place to be doing a bounce. It's kind of like the deepest healthy place. Anything lower, we start to look at monthly levels. We start to look at maybe losing weekly ranges and challenging monthly ranges. But yeah, that's where we're at now. As far as liquidity goes, I don't know whether you're going to get a proper bounce because too many people are longing, particularly on BTC. So yeah, we do have those targets for 85 and 82 and 84, 87. There's a whole bunch of targets there, hold levels there. And based on that and the fact that liquidity is starting to form, yeah, it's probably going to have another go at it, but we shall see. Same sort of thing for Sol. Not as many people longing comparatively on Sol, but and it Sol, ironically, it's the one with the structure that really looks like it wants to go up, but that's just, I think, mostly because there are quite a few shorts there to grab, and they're quite close and they're within the range, so why not go take them? But if it does have another dip, it's probably going to come down to sort of like that 121 to 125 area. There's a few different places in there that could bounce. If it keeps traveling up from where it is now, then 138 to 145 is probably where we go. I won't bother looking at the higher time frame liquidity because, to be fair, I don't think we're going to be getting there today. Okay, so let's have a look at Sol BTC. So on the daily, we need it to just push up a bit more. If it was to close, we see it here, which is that 15006, it'll be opening under trend, under break, and you're probably going to see another dump. If it is to get above the break level, it's still not hard closed. And if it's to be on the trend, then it's still not breaking or capable of breaking a trend. So you pretty much, for a bullish scenario, you need the Sol BTC candle to actually close upwards, which means a minimum of sort of getting over 15142. Anything less than that, it's still really just in the downtrend and nothing is breaking. So that's where that's at. Weekly is still trying to push up off support, but can't really get back through the trends that it's got stuck under. And monthly is trying to move up, but for the monthly to move up, the weekly has to get over its trends, and for the weekly to get over its trends, the daily has to start flipping positive. And as it currently stands, they just seem to be doing everything to try and keep this repressed. So yesterday, as an example, they could have closed it, at say 15223, and it would have been top-sided trend, and it could have had a bounce to try and target the hold. But now it got sold down just right at the end of the day to be on the trend, and then of course, what you get is you get a dip. So we have an hour to go. If it gets pushed up in an hour, then maybe finally we're going to see an actual bounce that is going to hold. But as it stands, that's still a pretty bearish close if it closes like that. Okay, let's have a look at the safety assets. Yeah, just more absolute horrible price action, to be fair. This entire period here, pretty much since creation of that range trend there on the 11th of November, has just been a mess. It's the range itself is just getting more and more and more compressed. So to be fair, it's probably the time just to take a holiday and don't even bother trying to trade Sol. Looking at this, or take a break from trading. So you compress your range sort of started up there, and if you follow these lines, it just keeps getting more and more and more compressed to the point that I think we're basically sitting in a range now of about 67.26 to 67.91. So we've just been forming boxes inside boxes inside boxes. And the good news is that it will break, like it has to break. Which way it breaks? Well, we don't know. If it breaks to the upside, that's going to be game over for alts pretty much. If it breaks to the downside, then you're going to get a pump. So as far as what would be a good close today, if it was to pull down even just a little bit more so that it's again squarely under those trends, that'd be good. But really you need to see it lose the break level. So we need to see hard closes under that 67.26%. And until we see that, the range is just compressing. So if you get a hard close over 67.91%, then the range is going to expand to the upside. But yeah, anything in between is just chop. So looking at the weekly's got a little bit more of a bias to pull to the downside just because it started on the downtrend or resistance trend. But again, it's just an absolute doji, as you can see. And the monthly is rejecting from the backside of the trend in the horizontal, so it's got a little bit more of a bias to the downside. So with safety assets having a bias to the downside weekly and monthly, it's really just a case of getting that daily range to break. Once that daily range breaks, then these will continue their path, and hopefully you'll then see that last little pump, and it may be that last little pump because we've still got a monthly uptrend that this thing's holding. So okay, let's have a look at the totals. Okay, so totals. Oh boy, every single close lately has just been horrible, really. Not so much from a up or down perspective because you can trade either way, but just from they're putting it in positions where it's just stuck, and you end up just getting a lot of compression. So I put in the Discord yesterday that when they closed it just up inside this area here, it was under 2 range trends, above a support trend, on the top side of a downtrend, but nothing is hard closed or broken. And it's just the worst place you could ever take a guess. You just don't know whether it's going to go up or down. It went down. Now, of course, it's creeping back up. So if we close back up over that 2.78, you might get a push to the upside, but it is just going to get met with 2 range trends, a support trend from the underside. If they bring it down a little more and even just down to say 2.76, then it's going to be under the downtrend squarely again, and then you're definitely going to start to see these 2.68, 2.65 areas. But it's just a horrible close. Once again, we really need this thing to get out into the open. And the weekly is, because the dailies just can't get a break, the weekly is just stuck under its break level. It's stuck under its distribution range level, and it's stuck under its trends. So, unless those dailies start to actually do something, then this is never going to get out of here. And if the weekly closes like this, then you're just going to get a rejection and more downsides. So this is truthfully what bear markets look like, and they can change in an instant because we can get the daily can reverse, and at the moment Sol's going up, BTC is going up as we're recording this, so maybe the close will be slightly better in an hour. We shall see. And we've got a few days to fix the weekly. Okay, monthly is still holding its range. It's under its trend. It's under its range trend or prior range trend. So again, you got time to fix this, but you need the daily to fix the weekly to fix the monthly. And if we look at it just sort of from more risk asset perspective, same sort of thing. We might get an engulfment close here. We need to see this close back up over 972. It did play out to the levels that we'd marked out. So we had that range sitting down there based on the support candle, and tapped that on the wick and bounced. So this is bullish for it to hit the wick and then take off like that without actually entering the body it means that it was a really, really strong buy level. So stuff like that indicates that they are trying, or they will do a genuine reversal here. So yeah, there are some signs that are pointing to this being real. Okay, and looking at it on the weekly, excluding the October 10 scam work, which went right into the body of the weekly support, it looks like this one is bouncing somewhere within the wick, so yeah, it's not too bad. It may yet be heading up here to this 107, but yeah, it's got to fix the daily, to fix the weekly, to fix the monthly, etc., etc. All right, let's have a look at Sol. Okay, so Sol on the daily opened in that horrible spot as well, just basically under the new range trend, above the hold level, above the support trend. So effectively it was in that wedge and kind of stuck between about 136 and 140. Now what it's done over the course of the day is it's gone down and swept that liquidity back down to retest that break level and at the 130 area. So there's pros and cons here. If it had stayed away from that break level would have become an origin level, and that means that you would have had the support range moving upwards. So it's a little bit suspect that they did a liquidity dive to that exact level, because then we don't actually have real support at that level. And if they close this, getting lots of alerts as it's pumping. If they close this, they just keep coming. They really are pumping it at the moment. If it closes below this origin level, which is, which one's this one? 137.82. So if it closes below that, then it's actually moving more into a range where the next level becomes the untested break level down here at 123. So now the only way that that would get avoided would be if it either closes above 137, then maybe it can just come up and try to fight the range trend again and try to target the 143 break level. The other way it could be avoided is if it does give a bad close today and be under 137, as long as it doesn't touch the break level of 130.495, as long as it doesn't touch that tomorrow, then the support level on the daily moves from 123 up to 130. Okay, so that's kind of the scenarios here. Although it's looking really bullish right now, and although it looks like it's really pumping, it has not closed in a spot that will actually make this better support yet. So we could pump like this for the next hour. So many alerts. But if it comes down and ends up closing under that 137, then it could just be, hey, fake pump and off we go again. So, all right, that's the daily. Now let's see if we can find something maybe a little bit more structurally positive. So let's have a look at the 17-day close. Okay, so this is a relatively tricky close structurally. And I might have this on a different chart. Here we go. So I've just got this on the Binance chart because Binance doesn't show that scam work. Now this is the first candle in distribution to close into the 137 hold. So it will actually create a range trend along the bottom here from all the way back in March to now. Now the wick is long enough on this, and the hold level is up here at 173, and the next range trend is up here above that, so that's nicely out of the way. And even if we put a really tight trend on here, that's out of the way as well. This particular move does have the ability to actually bounce off that range trend and come all the way back to 173. And there are a lot of there's just been a lot of structure created pointing at that same area, but none of it has been able to be actioned because basically BTC has just been in a constant grind down, which has stopped bouncing of Sol. So if this is it and BTC is bouncing, then we might get a bad close today, maybe on Sol, and that might allow us to come down here and hit these levels again, down around the 130s or possibly lower, but maybe it lets us hit 130 again, in which case it would be touching that range trend, and then at some point, hopefully, that would kick in and shift the price all the way back up there to 173. Okay, so that's our 17-day close, but it is a big close, so it might be December, before you actually even see that happen. And we also have a 19-day close today, and that's under trend. So if it goes back up and retests the trend, then that would be a target of about 156. If it goes up and tests the if it goes back up and tests the range creation level, distribution range creation level, that'd be 165. And if it falls down to the next level of the range, then that would be 111. So we've got supports. We've got a whole candle that we didn't touch. So yeah, there is a hold there at 127 that could create a range trend, but the thing is it can't create a range trend on this candle because it hasn't touched it. So maybe it goes down, hits it with the next one, then you got to wait a whole another 17 days or 19 days, unfortunately. And our untested origin support level for this is 120. So yeah, we're getting pretty close to 120 now, looking at this. And if we close under 137 today, then it's pretty possible that we see 120. But where are we? Jeez, we're pretty close to 137. Okay. Yeah. And I could show you a ton of moves that are all in play to these higher levels. Most of them sort of around that 177 to 190. But yeah, we need to start seeing these dailies get better. And also just something I looked at today was, I might have already shown you this, can't remember. It's my second attempt at recording this video, so don't know whether I showed you this in the first one or the second one, but this is CME structure, which is slightly different. And if the CME structure kind of plays out, then you should see a minimum bounce. If it happens this month, you should see a minimum bounce to 162, and if it happens next month, then yeah, it might stop at 146 or 154 if it hasn't gone above those levels this month. So, but that's just CME structure for Sol. Right, let's have a look at BTC. Okay, so BTC on the daily has pulled up into a reasonable position on top of the downtrend, so that's positive. However, unless it closes above 92200, then it's still got hold level, so you'd expect it then to reject and travel down again. Now, someone was asking in the Discord today about wicks and how they're relevant. So because the wick is so long on this accumulation candle, for this to actually create further downside ranging, it has to distribute all the way down and close under 86,469. So it could do that, but that's just one of the things about wicks. So when you get a really long wick like that, quite often you have a rejection, but it's not usually a rejection that gives masses of continuation. When you have a short wick and an engulfment of everything, then you can usually get more continuation because it brings that level up a bit higher. So looking at this, it's still quite bearish because it's underneath these 93465 levels and 9400 levels. So yeah, you might get another bit of downside unless it can just sneak up. It's got to go up about $900 by the end of the day. 43 minutes, $900, maybe. Stranger things have happened. The trend, the actual support trend, will move from the top side to the bottom side. And so if they are going to flip this bullish, what they're probably going to do is reject off that hold level if it exists, come down, hit the trend that's moved to the bottom, which would see another dip. They might use that to do the retest on this 88,500 level, which they haven't quite touched. And then there's also retest levels at 87,400 as well. So those will be the last two daily retests. So we've completed the weekly retest. We haven't completed those two daily retests. They might flip the trend to the bottom, reject the hold, come down, do the retests, then get the actual pump. So that would be a tricky way that they might handle this, because everyone that's like longing right now, like as we record this video, all of their entries, etc., will be inside the range of this wick. So if they were to push down and do these retests, they'd end up grabbing them and off they go. So may not just recover from here. I guess we shall see. Right, let's have a look at the bigger time frames. Okay, so I'm just going to do these two back to front, because on the 19-day BTC, we hit the wick of the hold candle. And just looking at that, the minimum retracement you'd expect from that is to 93456. So if you just remember 93456, and let's flick back to the daily, what do we have on the daily? We have a origin level to reject on the daily at 93456. So then if we go to that minimum obligation, we might end up rejecting the daily on the new candle that's just opened. And then if we look at the 17-day, 17-day did not hit its hold level. So yeah, because the wick only went to 88,600. Look at that perfect round number. Whereas the hold level for this starts at 88,500. So the obligation for this one, bearishly, is to go to 94,534. Bullishly is to go to 97.172. But they haven't touched it. And so given they have touched the one that leads into the daily rejection, it's kind of more of a justification that they're going to nuke these longs that are chasing now. So just be very careful of that level, that 90, where were I? 93,456. Okay, there's too much confluence between that and what we have and haven't touched on the higher time frames. And looking at the weekly, that was our last weekly break level to be retested. So 88,471, so it's done. If that does not recover, then the next place on the weekly that the price is going to try and move to is 82,342. So, yep, that's makes some popping sounds, insert sound effects. And I don't think we didn't actually hit the weekly hold candle. There is a difference between these two candles. So one of them is a break level, one of them is a hold candle. The hold candle starts at 88,500 and goes to 82,604 at the body, and then there'll be fractal levels inside there for really bearish times. So the higher it bounces off the hold level, the more bullish it is. But we haven't technically hit that weekly hold level yet, so we are bouncing off the break level. And 93,456 might also be roughly where the backside of that range trend is. So there's quite a bit of confluence with that level being problematic if it gets up to there. If it gets through it, then yippee-ki-yay, it's going to be off higher, but we won't know that until we get to that level. Right, let's have a quick look at Tesla. Yeah, so the daily for Tesla is still under the downtrend. It's the second hard close below the support trend. That's not very bullish at all, really. So it is still above one of the support trends, but unless you get a yellow candle back up over that 411 price point, then it's not looking great. Yeah, currently as the weekly stands, you might end up with some kind of downtrend like that, which could reject off and then come back down. The weekly is effectively in the middle. I sort of call it a non-triggered state because it hasn't really gone right up into the hold level. It's tested the range creation level, but it hasn't challenged the uptrend, so it's sort of just in a untriggered state. You don't really know whether this range is going to keep playing out to the downside until it either bounces off or breaks that trend below. So yeah, it's not too much you can take from that. And maybe we'll have another quick look at MicroStrategy. So on the 3-month for MicroStrategy, the two levels I'd be paying attention to is 174 and 115. And if it was to do a retest of the entire range, then it'd be 88. So that's looking like it's pretty bearish. Now, if we look at the 1 month, 1 month. So your 1 month levels, it looks like it's down below. It's down below the range base for the 1 month. So I mean, it can bounce from around here and bounce up as high as about 262. That's possible based on the monthly. Failing that, it's going to head down. So 174 being the 3-month is actually a slightly higher level of support than the 163, which is where the support starts for the 1 month. But yeah, it's still, that thing really needs to go back up. And if we look at the weekly, to complete its weekly retests of its origin breakout level, it's got to go to 174. Yeah, so 174's got a bit of confluence there. It's sort of like a 3-month support level. It's a weekly retest. So that's 174 is basically like BTC going back to 88,700 that it just did. So that's pretty much that level there. It's also confluent with the exterior trend. It looks like it's going to break that interior if it closes down on the weekly, but yeah, that 174 level is looking pretty much in reach right now. Okay, let's look at the daily. Yeah, daily looks like it's going to possibly engulf to the downside. Yeah, there was a range trend down there at 134. There is daily. The base of the daily range is about 158. So, and it's actually sitting on something on the daily at the moment. Break level. Yeah, so it's sitting on a daily break level at the moment. So it's basically just like the same as Bitcoin, really. So the difference here is, whereas Bitcoin looks like it could recover from where it is now, strategy looks like it probably can't. So, or at least it's going to have to go that little bit further down. So if these two things are quite symbiotic, then maybe that does mean that BTC goes up, dips down, kind of like what it looks like it might on the charts, and that means that MicroStrategy takes a dump down below this 174 level just to sort of finally hit those high time frame supports. Okay, that's us. We'll like, subscribe, and all that stuff, and we'll catch you again on the next one.